Foreclosure filings are up 132% year over year. But in today's video, I'm going to tell you why a foreclosure wave isn't likely to happen. Are you a homebuyer sitting on the sidelines waiting for the foreclosure wave or the shadow inventory that everyone's been talking about to drive home prices down so that you can buy a home for 50 cents on the dollar? Well, in today's video, we're going to talk about the most recent data out there. We're going to talk about the headlines that show that foreclosures are up. But we're also going to talk about why it's not likely that you see foreclosures anytime soon. So the latest data shows that 78,000 foreclosure filings happened in the first quarter of 2022. And that may seem like a lot. As I mentioned, we're up 132% year over year. But it's all relative. You have to understand where we're coming from. Last year this time, we couldn't really have foreclosures because the moratoriums were still in place from the CARES Act. So the fact that we've seen foreclosures increase isn't really a big deal. And at the same time, you have to use a little bit of context here. You know, prior to the pandemic, we were seeing 30 to 40,000 foreclosure starts per month. So the fact that we've seen 78,000 in the first quarter alone isn't really a big deal because we were seeing that in a month and a half prior to the pandemic. And prior to the pandemic, no one was out there actually talking about foreclosures. It didn't happen until we saw the massive increase in equity over the last couple of years. And the primary reason that people want to talk about foreclosure wave is because they missed the boat. They don't own property. They hope to see a foreclosure wave happening so that they can actually buy a home. But as I mentioned, you've got nearly $6 trillion in equity created in just the last 2 years alone. That's $185,000 of tappable equity per household. That's in addition to the 20% they need in order to tap that equity. So the average homeowner out there has a lot of equity in their property. So you might be saying, well, foreclosures are still going to happen when property values decline. So let's take a minute here and actually talk about what has to be true in order for foreclosures to actually take place. First off, you need a seller who's in duress that has to sell their property. They have to move. They have no other choice. That homeowner also has to be in a position where they owe more on that home than it's worth, than the cost to sell that property. And they have to be in a position where they're not willing to work with their bank. They're not willing to negotiate, try to modify their mortgage. They're just saying, screw it, I'm staying in my property and this is the way it is. That's what has to happen in order for a foreclosure to actually come to market. But even then, the process takes 90 days, 6 months, a year in some cases. In fact, the majority of foreclosures that you're seeing right now date back as far as 2009. So the foreclosures that you're seeing right now aren't foreclosures where people bought property over the last couple of years and got in a situation where they can't afford payments. These foreclosures go back prior to the pandemic. These people couldn't make their payments prior to the pandemic, so they weren't able to take advantage of the forbearance that was put in the CARES Act. These people were in a position where they were already in a situation of duress. But fortunately for them, there were moratoriums put in place where no foreclosures could happen. So they've been staying in those properties for the last couple of years, not having to make their payments. And now we're at a position in the market where foreclosures are becoming active again. So the banks are able to act on them. And that's why you're seeing some foreclosures in some markets. Now, I know there's going to be people out there that says, Jeb, you're crazy. Property values are going to decline. That's the next leg in this thing. Property values are going to decline significantly, and that's why people are going to owe way more on their homes than they're worth. And people are just going to let go of them because they can't afford the payments. Well, I would ask you to consider the fact that we're still in a seller's market, one where inventory is very low. Buyer demand is still relatively high considering where interest rates have gone, but we're still in a seller's market. Foreclosures don't happen in a seller's market. They happen in a market where there's an increase of inventory. And now a lot of you might say, well, that increase in inventory is going to come from the shadow inventory that everybody's talking about. Well, for those of you who don't understand shadow inventory, let's take a minute here and actually talk about what shadow inventory is. Shadow inventory is the idea that an investor bought a property for way less money, say during the last housing debacle, if you will, and they held on to it because that wasn't the best time to sell the property, but they would consider putting that home on the market or dumping that shadow inventory as values increased. Well, we've seen the best housing market that we've seen, historically speaking, ever over the last couple of years, and we've seen no increase in shadow inventory. So why would investors start to dump the property now when inventories actually increase? Wouldn't you want to sell it when there's no inventory out there, when buyers were putting in multiple offers going way above the asking price? Why would you sell the shadow inventory in an environment where the market's starting to stall a little bit? Not change entirely, but these investors have already missed the opportunity. In fact, many of these investors have been buying property the entire time. Why? Because rents are going up. Rents are continuing to increase. And that's a big factor that's different than the last housing debacle that we went through. Back in '08, not only did people have short-term adjustable rate loans, liar loans, anybody could get a loan during that time. They put no money down in order to get those loans. They were also at a position where, home values had declined. Many of these buyers did owe more than the properties were worth, and they weren't in a position to refinance them because they couldn't get qualified because the guidelines had changed. So many of these homeowners were stuck in a position of, how do I continue to make this payment? It's gone up considerably because of the adjustable rate. My property values declined. What do? I don't have the money to stay here. And so many of them said, you know what? Screw it. And they went and rented the same exact house across the street that in many cases was nicer than the one that they owned for less money than their original mortgage was. At that time, rents were very, very low. But what we've seen over the last couple of years is rental properties have increased substantially, not only in value, but in demand. If you're in the rental market at the moment, you know exactly what I'm talking about. Every rental I put on the market, there's 10, 15, 20 applications, people willing to pay the entire year up front in many cases, pay more than the actual lease amount. This is what was happening in housing just a couple of months ago. Well, it's still happening in the rental market. And you might be saying, well, why are rentals in such high demand? Well, there's a number of factors playing into that. One, you have people that have to move, right? They move from one rental to the next. So that's taking up, rentals. You have tenants that have rented a property forever. The sellers come to them and said, hey, look, I'm selling my property. You've got to go find something else. Now that seller has to go rent something else. You have migration patterns from the pandemic where people move to different areas and taking up rentals. At the same time, you have a generation of people that are becoming prime buying age that can't afford to buy, and they no longer want to live with their parents, and so they're out there in the rental market as well. Along with rising inflation is driving prices up. So it's a different environment right now. People aren't in a position of duress at the moment, right? Many of these people have equity in their property like we discussed. And if they were to sell, they would actually have to go rent something in many cases that's more expensive than their current fixed rate mortgage that they locked in the 2 and 3% range just a couple of years ago. So the idea of foreclosures happening, a lot of things need to happen in order for that to be true. And at the moment, none of them are falling into place. And I'd like to take a minute and ask a favor. What are your thoughts? What are your thoughts on foreclosures? Now, I did a recent survey on my channel asking people what their thoughts were, but I'd love to know your thoughts. Do you see foreclosures happening? And I'm not talking about a few here and there because that's natural to the market. Do you think you'll see a massive wave of foreclosures across the U.S. that brings supply levels down? Let me know in the comments below. And while you're at it, do me a favor, hit that thumbs up if you find any value in this content at all. So to recap, you're not likely to see foreclosures because there's so much equity in the system, because it is still a seller's market, one with very little inventory. Buyer demand is still out there. While rates have risen and buyer demand has backed off, people are still buying homes. And you're not likely to see foreclosures happen until it switches. It needs to be more of a buyer's market where inventory levels rise, the amount of equity starts to drop in people's home, and you start to see rising unemployment. At the moment, we're at the lowest levels of employment that we've seen in a very, very long time. So employment is still very good. While there's a lot happening in the economy, the people that want a job have one. In many cases, they have two. So until all of those things that I just mentioned change, you're not likely to see foreclosures come to the market. Now, that doesn't mean the housing market can't slow down. In fact, we've already seen a slowdown, and we're likely to see it continue to increase. But if you want more information on that, do me a favor, check out this video here where I dive into it in more detail. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.